154.86s, because that was the most recent structure level that got violated. Now, we violated this one too, but this is the most recent one, and so recent structure is what we want to pay attention to. And so if I drop down to, this is my daily time frame, so this is what I would consider to be my higher time frame. And this can vary based on you and how often, frequently you want to trade and how much time you have to trade. Your higher time frame may be a weekly chart or a monthly chart. But my point being is that this is my higher time frame. So if I want to start looking for trading opportunities, I'm going to drop down to my trading time frame, in this case the 1 hour chart. And here you can see my two little alerts that I've got set up here. And essentially what I did was I said, well, if the market comes up into this level to around 154.86s, I know that's a higher time frame structure level I want to pay attention to. So if the market comes up...
You want to pay attention to that? Do you really want to pay attention to that? Now, I'm at the same place on this chart that he is. And I just... I mean, this constant... There's so much this guy's saying that is so totally against being a profitable trader. I just don't... Where did this guy come up with this checklist stuff? Trading is really for people that have a very crude approach to the market. And he hasn't broke out the fib tool, thank God. But you don't need Fibonacci. What you need to know is where the 100 pips are, and where the 50, and where the 25, and how tight is your stop, and all that stuff. That's all you need to know.
Up into that level, I want to be alerted because I want to be watching for some sort of reversal pattern. Maybe it's a large doji candle, or maybe it's a double top with bearish resistance.
And maybe it's a girl with her pants pulled down.
I'm sorry, double top up against resistance with bearish divergence on it. So there's a lot of different things that could potentially give me an indication that the market is going to reverse here, but what I want to pay attention to is this particular level, 154.86s.
154.86. See if I can find that. 154.86 would be about right here. So he wants to pay attention to this level. 54.86. And I just don't understand why. Because he's looking to, I think he's looking to short it there, I think he says.
But what happened was we came up into that zone, but we didn't quite get up into the 154.86 level. And then the market kind of came back and we rallied up, and then we just kind of muddled our way down towards a previous structure area. And I took a look at this and I said, well, what happens if the market...
I think you just missed something there, Jason. It's not a structure area. It's a top. In fact, it's not just a top. What kind of top is it now, Jason? It's a double top, right? Now, how is this guy able to get clients? How is this happening? Not only is it a top, and he does realize later on that it's a round number. It's adorable. I just can't take it. People sign up for this guy all day long. And then people say, that was a great video, Jason. Now, if you step back and ask yourself, why are you getting stopped out of trades? And, of course, he's going to do more bad stop placement where you want to get in. I'm getting in where he's getting stopped out. But notice how Fibonacci is completely worthless when it comes to price psychology, which the round number and the 50 handle and the 25 handle, 25 is more of a scalper's situation, but what is wrong with this top at the round number? That's why I put the round numbers in, because it saves me from drawing these trend lines. So we have a double top, we break out. Where do we come back to, Jason? Entry, buy limit here. Where's your stop? Maybe right here, 25 pips stop. Risk reward ratios, better than break even, make 50 pips, and you make it all the way back to the 50-yard line. Another thing here is just because, you know, I know all my subscribers want these free tricks. Had he gone short here, or people like him, he's a retail trader. He's not, you know, the thing professional, I think it means if you sell a course, you're a professional trader. I don't know what that means now. But think about this one. I mean, riddle me this, Batman. You got this situation here where you're only coming up and just clipping that thing, and people got stops up here. I went short up here. I'm up in the trade. I'm up in the trade, or whatever it is. Why aren't you selling here? Why aren't you buying below here? I mean, all of these are just fantastic low-risk trades. How is he missing? Well, part of he's missing is he's got these stupid candles up here. I mean, just, you know, you just gag a maggot with this stuff. You know, on the weekends I watch these videos and I just think to myself, you got to be kidding me. Seriously? How is he missing? As he's describing this chart, how is he glossing over that? You know why he's glossing over that? Because he's got a Fibonacci tool and everything looks like a Fibonacci, you know. He's just not looking for, you can't see the forest for the trees because this, unfortunately, is the forest. All these candles, look at this double top became a bottom bang. It's not a lot of pips, but you can see what's going on here on the 1 hour structure. You know, let me put him back on so he can hang himself here with this retarded video.
It comes down here, I can look at this previous resistance level here, the resistance here before the breakout. And I said, what if the market comes down into this level here at around 154 evens? And I said, well,
so you just figured that out. And I don't know where the evens comes from. I guess it's for the people that work at GMs.
Let me take a look. And so I grabbed my little line tool here and I said, okay, 154, boom, let's put it right there. My stops have to go below the swing low here. Swing low is 38, so 28's for stops here. And then my targets would have to be up here against this structure level. Well, I took a look at that, and what happened was I had an inverted risk to reward trade. As you guys can tell here, I never want to risk in loss more than I stand to gain in profit.
Now, why would he put his stop back here? And look how wide he put it. Is this guy kidding? He's got to be an intelligent person. I've watched his other show where he talks about politics. He seems to have half a brain. Why would he put a stop here at this inverted hammer? I mean, is this just me? Okay, I don't know what happened to me, but I guess I looked at the market. Now notice this top. You can't see it in his chart because you can't see. He doesn't have a line chart. But look, the top became a bottom here. This is very important. Pivot exit. It has to hold this. So why does he put such a big stop on this? And when he says, well, you have to come back here, well, that's what a robot would do. A robot could trade what he's trading. You know, humans can out-trade any robot. You know, people ask, hey, that's good EA. Can I get an EAs are garbage. Maybe you have a EA that alerts you that there's a narrow bar. It's time to put on a trade. But look at all this dilly-dally, and then we explode up. Look what happened just before we went up. What did we do? We stopped everybody out because, you know, there was some guy that was trading his system, and they put a buy stop here. And what happened? Oopsie daisy. Oh, you see this? The guy that's long here, where's his stop at here? Oh, he got stopped out. Oh, he got stopped out. He missed out on this big rally. Gee, I wonder why. It's so crazy. I mean, really? It's almost starting to figure this out, huh?
And so in this case, this particular level at this previous structure level back here didn't work very well. But what about this little internal level where the market found a little bit of a blip? What if I just moved my entry down just a little bit? Now all of a sudden you see that what was a trade where I did not have the opportunity to enter would give me a risk reward.
Okay, look what his risk reward ratio would have been if he had a stop where my stop is, and he tightened it up. His ratios would be like 4 to 1. It's crazy.
That would make a lot of sense. And then we may very well see the market come down into this zone at 153.87s and rally all the way back up to this previous structure at 154.86s, where I could then look for a reversal pattern to get short again.
But see, what he missed here is his place to get short has nothing to do with this larger time frame structure. And anybody that's trading this thing where they're running a monthly and a weekly on their chart, take it the hell off there. What he said earlier in this video is, I'm going to go to my trading chart, which is the 1 hour. So if you're a trader and you trade, why do you care? Now, he wants somebody to email him an alert, blah, blah. We hit the high of the day. I'm looking for this and that. Are you kidding me? Are you seriously going to tell me? This is like me saying to you, I'm going to meet you at the coffee shop, but if I see a yellow Honda on the way there, I'll probably take a diversion down 2nd Street over to Main Street. And you have this convoluted story. And I understand that, trading attracts intelligent people and they want to show off how smart they are. But it's not for that. Trading's not for intelligent people. It's for people that can just accept the real market maker structure. You cannot see this? How is this guy missing it? Every video, he still hasn't caught on to where your orders should be placed. And how is that? I guess it's part of the syndicate. You have to join the syndicate.
So what I've essentially done here, folks, is I've created a bracket where I have resistance looking to sell on the high side and an opportunity to buy at the low end. Now, it doesn't mean that that's what I'm going to do. It just means that now I'm paying attention. And one of the nice things about
paying attention to the wrong things all day long. But he's selling courses. What does he have to trade for?
This TradingView software that I teach on every single week.
TradingView software. Okay, people, I can save you a lot of agony. Just put a 1-period moving average on top of a bar chart.
Is that it's very simple. If I want to drop in an alert, all I simply do is right-click, go to Add Alert, and it will ask me, pound dollar, do you want to do it crossing? Do you want to do it crossing down or crossing
Okay,
up?
wait a minute. You just opened up that crap. You must time you're going to spend. Can I ask, be honest, please? People, tell me. Is this not the most convoluted way to trade in your life? What happened to simplicity? What happened to, Simplify, Simplify, Simplify by Henry David Thoreau? What happened to this? What happened to this clean concept? Okay, so he's going to set this up. Let me guess what's going to happen here. Now, psychologically, and trading is very psychological from an execution standpoint, from every standpoint you can imagine. He's going to set up the alert. He's going to have somebody email his fancy TradingView software that you think you have to buy. He's probably a sponsor for that garbage. I mean, save everybody. I try to save people money that watch this guy try to trade. And they'll say, oh, he's really good. He made all these great calls and he made money. He's making, yeah, okay, you know what? I could teach the 10-year-old across the street to trade better than this guy. Because he doesn't have this will, this ego to, okay, the point is he's going to send this email. Now, do you imagine the trader that's sitting at work going, I'm just waiting to get that alert. I'm just waiting to get that alert. Okay, psychologically, he's all ramped up. He's all keyed. He's looking for confirmation. If I hear that word confirmation, I mean, they can't have confirmation. Confirmation is you didn't blow your account up today. Now, you get the email, right? You run your chart. Now, unless you have a trade plan, that does you no good. And if you're going to sit there and judge on a 1-hour chart whether you got a tweezer, a hammer, a flying dragon, 3 soldiers to the moon, right? You mean to tell me you're going to be able to make a judgment call whether you're going to sell there? And where's your stop going to go? Is it a percentage stop? Is it a structure stop? Are you going to put a stop where the retail traders put their stop and get stopped out? How many currency pairs are you trading? You're trading this one? Well, I got alert on 5 currency pairs. You're running your platform. This is absolutely a disaster. It's a trading disaster waiting to happen. Okay, let this guy continue with his bad advice.
Up, greater than, less than, entering a channel, exiting the channel. How do you want me to notify you?
How do you want me to notify you? Okay, I left you in charge of the house. I hired this lady to take care of my house. Let's say, of course, she's got to be cute. And so she's working on the house, and she says, well, how you want me to alert you when the house catches on fire? You want me to email you? I'm like, you know what? Just call the fire department, right? I mean, this idea that he's going to go, all these things, and I understand that if you have a tool, you want to use it. But really need this stuff? Come on.
when this particular level is hit and how it's hit.
Not even if it's hit, but how it's hit. And I want to be alerted. I'm sorry, but if you're going to be on the highway and you get alerted on your cell phone, you're going to pull over, break out your laptop, boot it up, or maybe you're going to trade off your phone while driving, which might be as bad as texting. But this is ridiculous. This would be like you're working in a factory, say, and people are producing products. And some guy comes in and goes, "Hey, have you ever thought about no, we're working here. Get out of here."
You just simply say, well, I just want to be notified if it's crossing that level. And then, of course, the value is already there. The frequency, do you want me to do it every single time that it crosses that level or just one time? So I put pop up, a sound, so I'm notified. I can even get it to
torture me. Tell me every time it flicks a half a pip.
An email or a text message when that gets violated, so I can be
aware
no matter where.
I prefer a greeting card with real stamps.
I am in the world throughout my trading day. I go ahead and click create, and boom, there's my little alert right there. Now, I don't particularly need that one, so we can delete that.
Well, thank God for admitting that after all that. Wow. Yeah, I suppose you could do all these things, and the trading's not for money at that point. It's just for entertainment, I guess.
It's probably this one here. Just go up here, click delete. Are you sure? Yes, and gone it is. And you can see I've got a series of alerts in here where the market that I'm watching in terms of the market right now. So that's the first one on bracketing. Now the next one that we want to talk a little bit about is called or entry stops and targets. So I want to use something that we played with.
Okay, let's show you. Let's show what's going on here. Now, what he did there was just so literally ridiculous. Now, at that point, is the thing, he had the alerts set up to alert him at this price. Now, notice how this became he was going to sell up here, mind you, right? He wanted to be alerted to sell at, he said 154.68, but notice how that became broke out, pulled back, and that became the place to get the hell long, right? And this is just a 1 hour British pound. There's no magic here. This is a 1 period moving average on top of a grid system. This is a grid indicator, and what it is this is the 100 pip, this is the 50, this is the 25, and the respect the market has for round numbers is quite evident, and at the 50 handle, because a lot of people, a lot of the banks, and a lot of people that Forex isn't just for people that have alerts on their systems trying to become a millionaire. It's actually it's a real currency that's being traded because people have orders sitting and they say, when it gets, in other words, they're like, okay, I got an order to go long at 50. I mean, you can see that on I'm sure the market depth and all that stuff. And the fact that the market creates unique patterns and all that, and how it gets to that price is in a lot of ways inconsequential to the fact that that's the price it has to get to before it reverses, because there's no sellers or buyers at any other price than the 50-yard line and the 100-yard line. It's that stupid simple. So if you had put sell limits up here at the 50-yard line to take 25, 50, 75, 100 pips off the table, that is your trade. You put the sell limit up there. That's it. Bing, bang, bong. It's stupid, easy. Why in the hell are people breaking out? And thank God he didn't break out the Gartley, because I would be throwing up in my mouth a little bit. But trading is just not that difficult. And notice what happened here. He's not going to tell you this. I don't know. I mean, you have to join the syndicate apparently. But look at the doji. Now, anytime you see a little bit of a pullback or a flat spot, that's a doji. Here's a doji. There's a doji. This should not be this hard. It just can't be this hard. If you believe God invented the universe, he would never invent a market that would hurt you. Look for structure tops become bottoms here. Now, where's Waldo? Can you pick it out? Like, anybody see the highlight books when they were a kid? Maybe they didn't have that in the UK, but and notice even the 25-yard line. It's very critical. After a break of this high, break out, come back to the 25-yard line, cut through this price, because once you start cutting through this, forget it. You look left, you see There's a big void here, right? This big hole filled. In fact, you could be accumulating to this whole phase depending on how deep your pockets are. Notice this one. Wow. Cuts below the 50-yard line. Accumulation phase happens where everybody has their retail stops, all these retail traders. This one here, where he was afraid to get in here because he had his stop down here. Well, what a buffoon. I mean, who does that? And he's teaching people how to trade. You got a 25 pip stop on here to make, 50 pips. Not a bad trade. And when we dip below again, because he did that video before the rest of this happened. But this is a constant. And if you had alert set, like he had an alert set there, can you imagine? I got an alert here. Okay, well, I'm going to buy. No, you're not. Like, you have to plan all these trades out in advance. And obviously, what's the next trade? Buy limits down here. Why? Because it's not only is it the 50-yard line, but it's the internal structure supports. And even the thing is, how many trades do you trade at that level? How tight's your stop? How big is your take profit? Well, your take profit has to be up into here. So you already know your exit before you get in. Maybe I'm just blowing through this too fast. I never know who's watching these videos, whether it's some guy that's never traded or people that have traded for years gone. Yeah, you're preaching to the choir. Shut the fuck up. But so yeah, here when it comes down here, so where is your exit when you get in here? Well, it has to be here to take something off the table, but it blew through that. And it even blew through this top. So that's the thing about trading that's difficult is, well, where do I get out? Well, you certainly, and then the breakout traders that come in a larger time frame, they get on board here. But you want to get in. The reason why I'm beating this guy up is because he said, well, I'm going to go to my trading. If you're trading on the 1 hour chart, stay on the 1 hour chart. Why are you putting the daily in there with alerts? Why in the hell would you want to fill your brain with a bunch of distractions, lose focus of what's really going on, of where you should really be trading? If you're trading on the 1 hour chart, admit it. Own it. You're a 1 hour trader. Now, you might drop down to the 15 for entry, but you're really looking for your targets on that 1 hour. The fact that you're going to get all greedy about it, and you're going to go to the daily time frame, well, that's, or the 4 hour even. Like, look at this 4 hour chart now. This 4 hour chart, I just lose my grid there. Look at how many pips are on this puppy, and look at the climax into the 100-yard line, right there. Boom. Now this 4 hour chart is going to take a lot more patience, but you just draw your trend line on close, not on wicks. You see that breakdown there. Not a lot of chances to get on the short trend this 1 hour. And where do you think the the people that have the stops in the market, like here you can see they come down, they chop that at the 50, and then they just rip it up. Well, obviously, when we got back to here, the 50-yard line, if you look left, it's the only thing this guy says that makes sense. Look left. That was the big support that was supposed to hold. All these guys were basing this channel. A lot of people were bullish, and they made money, no doubt, on every pullback along this channel. And I don't know why he doesn't do channels. That guy doesn't moving average, but he has a Gartley patterns. With him and this Alex Stokes have lost more money with Gartley patterns because that's like a romantic fantasy trade. But look at this thing ricochet off this, come back to here. Where is it going to? Now, if you're selling off of that, you just put, what your alert is? Your alert is putting the damn order in. And you put in a series of orders. You don't just put one order. You put a scalp in here because you want to take something. You actually have a sell limit here that never got filled. What do you do here on the buy side of the British pound? Okay, buy limits here. Why? Why do you want to? Because that is the fair value. I'm an auction trader, so I'm looking at fair value and unfair value. Unfair value is when you dip below into this. You hit the 50-yard line here. This is the buy. You're on the edge of the market. You're on almost to outside fair value being anything that happens in this range. Now, this is the big thing about people getting chopped to death in the British pound here. And if you're one of these traders, like what he's doing there is just so stupid. I mean, I can't, who isn't looking at these markets for what they really are? Is a torture grid for people that put stops in the wrong place, where that should be where they're getting in. Every guy that's teaching how to trade is totally, and I guess that's why a lot of people lose. A lot of people lose for different reasons too, because out drinking too much. But when a top becomes a bottom internally, and depending on your level of patience, but this top becomes this bottom, we go up. There's also all of these, and during these accumulation phases, yeah, that's the value area. That's the place to get in. And this is I'm not going to look long term on this. It's crawling up this faint channel here, but if you're going to put pendings in and wait to get filled, which I'm not going to do on a 4-hour chart, but you're looking to get market comes back into here, you get in blah blah blah. But my point is that even on the 15-minute chart, which is probably the most money you'll ever make with the lowest risk, you can see it on the 15 here. So where's the trade? Structured trading, which supposedly what this guy's doing is structured trading, is okay. Here's a top, became a bottom, top became a bottom. That's a setup. Actually, you want to trade setups. Here's a double bottom. Now, you can't see a double bottom in candlesticks. And I just don't get the whole candlestick thing, honestly. I think it's really one of these fashion things. I mean, I think when women started to pluck their eyebrows, and why did they ever do that? God, it's so terrible. It looks like they're a burn victim. It's so not hot. But I guess when one girl does it, they have to keep up with the other girls, so they do the same stupid move and butcher their face or get plastic surgery and ruin what God gave them. Obviously a doji, and he did talk about bracketing earlier. We started that video. Like, I can't listen to the guy, but he started the video and said, just bracket whichever way it goes. Yeah, of course. But don't bracket it on a daily chart. What in the hell? Jeez, oh Pete's, people. Now here you can't be looking for huge targets, but notice the chop out. Notice the stop hunt. That's where you want to get in. Now that's where if he went long here, he would put his stop here. I guarantee you, judging from everything this guy does, and he does it ass backwards. But then, it just goes to show you that if you have, if you tell people, listen, I'm going to show you how to trade, they can't wait to give you money. I had people ask me, how much do you charge to show you? I don't charge anything to show you how to trade. Because every time I show you how to trade, I learn more about trading myself. I learn about, oh, you know what? That's right, that really does work. And it's like, if I show you how to drive a car, I wouldn't show you how I drive a car. I'd show you how you're supposed to drive a car. So let's go to, look at this stuff here. Now, you mean to tell me, this is a 15-minute British pound. What in the hell is going on here, people? Now, if you're a 15-minute trader, you got to be on top of this. But look at the stab into the 50. Bam. They want that 50 because there's orders sitting there. There's orders sitting at the 100. This is a 50 pip trade. And what the hell is that? Okay, you got sell limits up here. Zoom out level so it doesn't look so brutal. How to trade these markets, okay? And a trade means you're going to get in and getting out. You're not investing. You're not trend trading this stuff necessarily, because 20% of it's trending. Although those are big moves, and trend traders will tell you, trend traders make the most amount of money. Yeah, sure, if they can handle the equity swings, right? Look at this thing. Man, they just chopped that puppy. And then they come and grab these guys and they pull it back. And then it's on and on and on. It's just on and on and on. There's no... Okay, I think you see what I'm saying, right? I mean, it's just not brain surgery. It's not even putting a Band-Aid on your arm surgery. Look at the respect for the 100 pip handle. I'm so sorry, all you Fibonacciists. Look at this constant revisit because there's orders sitting there. You think these banks banks are going to nitpick over 10 pips? Look at the triple top at the 100. Again you're selling. You're buying 100 pips. Come on, man. Look at this tag and bag at the 100. Come on. What, are you kidding me? Oh, here's the trend. Now, this is the argument. Well, I'm a trend trader. Look at. Yeah, but I mean, how often does that happen? Not very often. Not at all. I don't know what the hell I'm at in this chart. I think I turned off my my scroll thing. But look at this stuff. Come on. Bang off the 100 to the 50 to the 100 to the 50. Come on. What do you see, guy? Crazy? Obviously, we're buying down here at the 50 next week, at the 100 again, if it comes back there. But I don't care. I'll just sit here and trade the damn, I gotta turn this thing back on. What the hell? Auto scroll, okay. Yeah, so here's the 1 hour chart. Okay, what's the next trade? Well, you got buy stops here, and you got buy limits down here at the 100-yard line. That's it. I mean, that's if you're just trading the dollar. And the idea that he's got alarms set. You gonna set an alarm for every currency? Come on, man. Be real. Enough with these garbage videos. And enough with this filling people's traders' heads, wannabe traders or traders, even traders that are trading, with this thing about, well, you know, if then, and like now you're gonna pile on all of these criteria, all these conditions. Let me see, is that going to be, and when it gets there, how, come on, just tighten up your stops, put a bunch of orders in. Instead of trading a 10K, trade 10 micros. You know, go the extra work, man. You know, life is 95% preparation, 5% execution. Any bozo can pull the trigger.